Singapore has introduced new measures to cool its public housing resale market and provide more support for first-time home buyers. It's lowered the loan-to-value or LTV limit for Housing and Development Board loans by 5 percentage points. It's also increased the enhanced CPF Housing Grant quantum for lower to middle-income first-time home buyers. The LTV limit for HDB loans has been lowered to 75% from 80%. This limit refers to the maximum amount of housing loan a flat applicant can take up as a percentage of the purchase price or flat value. The move brings the LTV limit for HDB loans in line with loans granted by financial institutions. The National Development Ministry and HDB say the aim is to further stabilize the HDB resale market and encourage flat buyers to borrow prudently. The government is also increasing the means-tested enhanced CPF housing grant by up to 40,000 Sing dollars for eligible families looking to buy their first flat. This brings the maximum grant amount to $120,000. The eligible singles can get up to $20,000 more, bringing the maximum grant amount for them to 60,000 Sing dollars. Now, the exact amount will depend on monthly household income, with larger grants for those who require more support. Sing Tien Foo, Provost's Chair, Professor at Department of Real Estate at NUS Business School, joins us for more now. Prof, give me, of course, your reaction to the latest announcement, the timing of the announcement, what you make of especially the plan to further reduce the LTV limit.
Yeah, good morning. I think these measures introduced yesterday, I think was trying to cool down the resale market. We have seen in the first 2 quarters of this year, the prices actually, for the resale property prices have actually gone up by about 4%. So it's a strong kind of momentum at the start of this year. I think this 5% in reduction in LTV can actually further tighten in terms of financial prudency of the buyers, especially in the resale HDB market. I think this measure is not meant to dampen the property prices of resale, especially the resale market, but actually I hope to be able to actually slow down or to stabilize the resale market.
Right, so you're saying that it's not meant to dampen prices, but to slow down the resale market. Do you expect to see further reduction ahead? I mean, I do know that MND and HDB is saying that at 75%, this LTV limit is in line with those granted by financial institutions.
Yeah, I think this will be aligned with the commercial banks. I think the loan limit, I think they can actually borrow up to 75%. I think if you look at this LTV, it's actually impact more on the financial side. I think especially for the higher end resale market, I think these financial measures can help to sort of reduce the borrowing limit and also the affordable the maximum prices that people will be able to pay for the resale market.
Prof, I'd like to know how much of the latest measures were in part prompted by the rise in private property prices. I'm referring to private property owners downgrading to HDB, thus they have lots of cash, and then moving to public housing. That could push up HDB prices.
Yeah, I think we see that measures have been introduced in 2022 September, where the private downgrader had to wait out for 15 months before they can enter the market again. I think this is a scam measures that actually introduced to actually impact to actually reduce the demands and to slow down the demand in the resale market. So I think the combination of these measures, actually the higher and resale market, especially those high price resale market, can actually slow down because we've seen the prices increase by 4% this first half of the years. I think a lot of these are driven by the mature market transaction, especially the more expensive transaction in the first half of the years. Well, in the private market, we have seen the volume has actually slowed down significantly in the first half of the years. I think it's important to continue to monitor how much of this impact will be actually spill into the private market.
Right, and so with the measures, the latest measure combined with that earlier announced a 15-month wait period for those in private housing, moving to public housing. Do you foresee? Do you expect any further measures targeted at the private housing sector. I also know that you say that the volume has slowed down, but is at a level where government can sort of take its foot off the pedal in terms of trying to manage the prices in that private sector?
I think for the private sector, I think it's actually at the stage where we see the volume has slowed down, even though the transaction price remain high. I think it's important to actually continue to monitor the situation without actually making too early the intervention at the moment. I think this can actually create uncertainty to the market because, as mentioned just now, I think the volume has slowed down. This is actually early signal that the market probably have already cooled down because I think we don't see as many transactions, especially in the new sale market. New launches have not seen the kind of response like what we've seen last 2 years, where in the first weekend of launches, more than half or more than even 70% of the new unit are snatched out. I think we see the new launches now actually are more moderated. People are actually more prudent and careful making the decision. I think for the resale market, I think this new intervention will be important because really the first half of the years, the prices have gone up by more than 4%. This is a very big increase for the resale market.
Right. And Prof, speaking of prices going up, the other measure is also the enhanced CPF Housing Grant for first-time buyers, up to 120,000 for families and 60,000 for singles. What do you make of this announcement and how far it will go in making housing affordable?
Yeah, I think this enhanced CPF Housing Grants actually is very much tilted toward the low and middle income household. So the 40,000 increase in the CPF, the enhanced CPF Housing Grant, actually is very timely. Especially for the low and middle income who actually face a lot more financial constraint given the rising housing prices. I think especially in the resale HDB and also the BTO housing market. So following the announcement, this new enhanced CPF Housing Grant can actually help the low and medium household actually improve the affordability and also giving them a lot more options, especially when the new housing classification type introduced in October, because they can actually use this enhanced CPF Housing Grant also to actually make some evaluation about new class or even the prime housing type. I think this enhanced housing CPF grant can actually help to boost their affordability level.
All right. And Prof, my final question is also something that MND and HDB have said. And they noted that, there was some supply tightness as fewer flats reached their minimum occupation period this year. Will this also then be kind of like a cyclical issue, perhaps in other years, where more homes would reach that MOP period?
Yeah, I think this, as you say, could be cyclical because during the COVID period, a lot of the construction have been delayed. Those people who actually received the flat later, I think probably have to wait longer before they can actually put the property into the market, the resale market for sales. I think these problems, could actually further ease because of the ramp up of supply. I think now buyers can actually have more choices because also the ramp up in the BTO market. Instead of waiting for the resale market, they can actually have a lot more option. And also given the increase in the supply of shorter waiting time flat moving forward, I think household or younger family can also evaluate the options between the BTO flat and resale HDB flat.
All right, Prof, appreciate your time this morning. Sing Tien Foo, Provost, Chair, Professor, Department of Real Estate at NUS Business School.